Before the new year, the Dow Jones Industrial Average was going up and then almost bang on 2024. It's been going down ever since. There has been a large rally in the markets overnight. What is going on with the stock market at the moment? Joining me live is Chief Investment Officer at the Motley, Scott Phillips. Good to see you, Scott. So there's been a bit of a boost to the markets overnight, but a few days ago we were saying that the Dow and the S&P 500 posted their worst start to the year since 2016. Why did everyone start selling in the new year? Is that just from people taking profits from that rally leading up to New Year's?
Kenny, good morning. Yeah, probably, mate. Look, honestly, and the other thing is when we give commentary like this, no one knows for sure, right? The market is made up of thousands and thousands of people all trading for their own purposes. But broadly speaking, yeah, the end of last year was a phenomenal run. If you look at the chart, the market was almost flat up for the year in late October, ended up really nicely here in Australia. In the US, a much more different story. They're up 25%, I think it was, for the S&P, 30% for the NASDAQ. A remarkable run last year. And you do get the sense that optimism was all the way in. You know, when the tide's all the way in, there's only one way it can go. And that kind of felt like the house sentiment was going. Over time, of course, the market goes up, but in short bursts, you get that ebb and flow of opinion, of sentiment. The sense, I think, that maybe the optimism that finished the year, that everything would be great in 2024, the Fed would cut rates, consumer confidence would bounce back, the RBA for us would cut rates as well. All of a sudden, people had a second look and went, you know what? What if they don't? What if we should be a little more cautious? That seems to be at least part of the reasoning for the market having a reasonably ordinary start to the year.
Yeah, so you think the roaring rally late last year was based off the hopes that the Federal Reserve would start easing monetary policy, but now doubts are setting in that a pivot will happen by policymakers?
Yeah, pretty much, mate. I think that's a really nice summary and much more succinctly than I put it. We did see after the US Fed kind of intimated in late October the next moves would be down. They might come sooner rather than later. The market got very excited. The thing which we call the dot plots, where the US Fed kind of puts the graph of expectations of interest rates on a chart and then gives it to us, says, here's what we're thinking about. The market kind of took that and ran with it. And I think to some degree that was behind the rally. And then I think probably in the new year, maybe the New Year's hangover, you kind of wake up and think, hang on, how excited did we get last night? Where maybe things are a bit over the top. Maybe we should have another look at this and just be careful. We're not assuming all the good news, which leaves no room for upside and plenty for downside. As I said, mate, this is all short-term machinations. Over the longer term, the market does go up because companies become more profitable over time. But that kind of sentiment ebb and flow that we get, month in, month out, really pronounced last year and maybe a hangover in early 2024.
We've been watching the inflation data here in Australia like a hawk over the past year. I believe that there's more inflation CPI data out here in Australia tomorrow. What are we expecting with that? And inflation, has it been coming down faster in the United States compared to here? Is that right? And if so, why is that?
Yeah, it has. So let's do the last one first, because that's an easier one. Yes, it has. It's come down quite quickly in the US. We've lagged on the way up when it came to inflation. We actually saw end of 2022, I think it was now, I've got to get my years right. We saw the US go up early. And we hadn't moved. And at that time, people were saying, maybe it's transitory, maybe it's just a US problem. Those two hopes were, I think, exactly that, way too hopeful, way too optimistic. A few months later, we caught up with that. On the way down, it seems the same is happening. The Yanks have started to come down much more quickly than we have. We're following slowly. And you're right, in the OECD, I think we're probably the highest or second highest inflation rate currently. 4.9% was the last set of numbers we saw. Tomorrow's numbers, the consensus is about 4.5%, which is a pretty big fall in absolute terms. You don't normally see inflation move that much, but of course not normally from this high. We should say NAB is actually predicting 4.1%. So there is some hope that inflation might fall more quickly than perhaps even the most optimistic of us might dare hope. If that is true, those rate cuts we just talked about are very much on the agenda sooner rather than later. I don't mean next month. I mean maybe, third quarter of the year, most expecting them to come in the fourth quarter, September, late third quarter, September through December, maybe 2 or 3 at the end of this year. If inflation does fall harder and faster, we may well see that brought forward. On the flip side, of course, a disappointing inflation read. Maybe prices don't come down would hurt. The best bit of news is the oil price overnight down 5%, down to $70 US a barrel. That's a really positive because, of course, we know for motorists directly, for all of us, our hip pockets, but more importantly, economically, for the world, that inflation globally, when the oil price comes down, is going to have a really nice kind of downward trend because of that lower oil price.
Yeah, it'd be nice to see some cheaper petrol, wouldn't it? Scott Phillips, thanks so much.
Thanks, Kenny.